Samir Arora joins us to tell us how he is looking at the move over the past few days. Samir, good morning. Thank you very much for joining us. We have about 2 minutes before the market actually opens. So tell us, do you think the Modi premium that this market had, is it overdone? Is it time now to start withdrawing that premium?
Well, in the last few weeks, actually few months, we have felt that the event type returns are over, which were related to the election and the success of Mr. Modi in the elections. And now it's a more regular market, which regular market means that there is a cyclical upturn happening, that inflation is declining, that current account deficit is in control, and that next year there might be interest rate cuts. So it's a normal good market rather than an event kind play, which is already over. And, we've been on a relative basis quite negative for the last 1.5 to 2 months since the original Supreme Court ruling. Not negative as in negative, but bringing our net down to the 60 type level, which was our longer term average, rather than the 80s and 90s we had in May and June.
Okay. Samir, hi, good morning. I know you're back from New York. I saw you take part in some of the Diwali celebrations on Times Square. But aside of that, in your interactions with the US investors and stakeholders, are you getting a sense of some risk aversion in the US markets that could perhaps derail other markets globally?
No, I don't think so. The story I take is very positive, which is that do not worry on a day-to-day basis on what Mr. Modi is doing. Let's assume and believe that whatever the previous government was doing, even if those things are done with a little bit more attention to detail, on timeliness, with less corruption, less controversy, and if it goes to the right stakeholders, if you're giving subsidy, give them to the right people. And some of the schemes that were started by the previous government, whether it's UID or whether it is trying to push GST or it is, a general deep direct benefits transfer or project monitoring group being constituted, even if those things are done and followed through, that is a major change for India, and that should be good enough at the first round, at the first level. And then we obviously believe that over time, Mr. Modi will do something new. But today, it doesn't appear that he's doing. That's why we are not holding our breath for that.
Samir Arora joins us to tell us how he is looking at the move over the past few days. Samir, good morning. Thank you very much for joining us. We have about 2 minutes before the market actually opens. So tell us, do you think the Modi premium that this market had, is it overdone? Is it time now to start withdrawing that premium?
Well, in the last few weeks, actually few months, we have felt that the event type returns are over, which were related to the election and the success of Mr. Modi in the elections. And now it's a more regular market, which regular market means that there is a cyclical upturn happening, that inflation is declining, that current account deficit is in control, and that next year there might be interest rate cuts. So it's a normal good market rather than an event kind play, which is already over. And, we've been on a relative basis quite negative for the last 1.5 to 2 months since the original Supreme Court ruling. Not negative as in negative, but bringing our net down to the 60 type level, which was our longer term average, rather than the 80s and 90s we had in May and June.
Okay. Samir, hi, good morning. I know you're back from New York. I saw you take part in some of the Diwali celebrations on Times Square. But aside of that, in your interactions with the US investors and stakeholders, are you getting a sense of some risk aversion in the US markets that could perhaps derail other markets globally?
No, I don't think so. The story I take is very positive, which is that do not worry on a day-to-day basis on what Mr. Modi is doing. Let's assume and believe that whatever the previous government was doing, even if those things are done with a little bit more attention to detail, on timeliness, with less corruption, less controversy, and if it goes to the right stakeholders, if you're giving subsidy, give them to the right people. And some of the schemes that were started by the previous government, whether it's UID or whether it is trying to push GST or it is, a general deep direct benefits transfer or project monitoring group being constituted, even if those things are done and followed through, that is a major change for India, and should be good enough at the first round, at the first level. And then we obviously believe that over time, Mr. Modi will do something new. But today, it doesn't appear that he's doing. That's why we are not holding our breath for that.
Samir, well, you describe this market now as a regular market where things are kind of falling into place. The macro imbalances are getting balanced on inflation or current account deficit or even fiscal deficit. How do you play that market then? Do you buy cyclicals at the bottom? Would you reach out to any of the banks, say the better quality banks?
Well, I would look at it that in the last few months, these cyclical stocks were up a lot, and it must have been loved, but it's over now.
Okay.
We actually live the current environment of the market where there are two groups, as it was in 11 and 12, the good companies and the bad companies. And I don't have the energy to try and buy beaten up cyclicals or beaten up banks, because my logic has always been the same, which is that if these companies do well, I will do well anyway. It may be I'll do a little less well than the others, than other people or than some stocks. But the point is that today the government doesn't seem to be today taking those decisions which can directly change some of these immediately. So I have no interest in buying, in fact we are short many or half of these stocks. Now we have a very massive short book. We are about, although our net is 65, we are something like 110 long and whatever 45 short. So we like our shorts and they're making good money.
Okay, exactly what you said. Those decisions that need to be taken not being taken. Chairman of 6 PSU banks don't have a chairman at this point in time. And then, of course, gas price decision not taken, possibly more reverses coming from the state electricity boards. Decisions that could very easily have been taken not being taken. Do you get this feeling that therefore a little more of the pro-India sentiment might roll off, and therefore you may be net short, maybe even more, sorry, not net short, maybe your net long would decrease a little more before the year is out?
I hope not. I think if it has to happen, it may happen now only. Because my view is that after Mr. Modi is back from US, then for the next few months and prior to budget, he should concentrate on the local issues. For example, the disappointments on simple things. It has taken us 1 year to figure out whether HDFC is a foreign company or an Indian company. By any stretch of imagination, I think it's an Indian company. But I'm not holding my breath for the FIPB to say it's an Indian company. So these are simple things. There is no lobby against it. There is no Communist Party saying declare it a foreign company. We have overly analyzed and interpreted our own issues. And for whatever pressure, I don't know what is the pressure. Another one I was disappointed was reading that the government is even considering, obviously I don't think there's even 1% chance that they'll accept it, but even to think that they are considering an ETF for 3 stocks, which are SUUTI shares, just because they don't want to sell them directly. So anybody who proposed it, he should have himself been embarrassed to propose it, but then somebody to even consider it. So these are my simple things. I'm a simple guy with very simple problems in life.
Okay, you coined rock set for many of the cyclical names. Samir, does that hold true for the mid-caps as well? Is the love over there as well?
Actually, mid-caps, we own a few and we'll buy if they correct more. We made a lot of money and then they went up so much at some correction buy. But most again, these are again in the similar sectors. So I am more looking at sector versus mid-cap because, in many companies, the mid-cap itself is a leader in that niche. So we don't overly care in that sense whether it's mid-cap or large-cap. But I am not interested right now, beyond a point, in stocks where you have to hold your breath for some event, some approval, some order, some gas price hike, some oil price hike, whatever. All those things I am not interested right now.
So what are you interested in at this point? I mean, I'm sure a lot of people are now getting their shopping basket ready because, there is a bit of an opportunity that you're getting in the market. If you had to buy, what are you buying?
We bought yesterday also. So we are buying the same old stuff, the boring stuff. We now like number one tech. Number one sector is technology because look at the valuations. The biggest companies are trading at 14 and 15 times earnings. And look at every other junk in our country trades at 20 and 30 and the consumers at 40 multiples. And I actually saw a report, going to 2017 and 2018 earnings. We don't have to do that in tech. So that is our number one. But in general, it's the same old things, tech and pharma, consumer, auto a little bit, and private banks we haven't added. In fact, we've reduced one a little bit, but broadly that will always be there. And we are shorting everything else, more or less, you can say.
Okay, Samir, would you worry with, that the global markets could cast a shadow over the next quarter or so on Indian markets? Anything that worries you overly, that the pro-risk sentiment that has prevailed over the past couple of years will ebb away? I mean, Fed rate hike, anything like that?
Well, that's why we have changed our portfolio so that now we are defensive long and cyclical short in some sense. But I would normally think that generally it doesn't look that it is very imminent, a global correction. Plus, we've always enjoyed, I think for the last 15, 20 years, a November, December to Feb rally in India. Primarily because in November, December, we get excited, and this time I hope that it is delivered because of budget expectations in the next 2 months and all that. And so therefore right now I'm looking at this short part only as a outcome of this Supreme Court ruling, which I was surprised that people delayed their negativity to the actual ruling, because even after the first ruling it was clear in black and white that the court has held it as illegal and non-transparent. So there was no way they would have said that it was illegal but it's over now. So therefore it was understood by us. At least we thought, and this time we got it right. But broadly, as of now, on this negative part, is to the last bit has happened because of this ruling, which, you know, in 2011 we were all caught, including me, that when there was mining ban and there was general policy slowdown, we did not connect to how many other things went off. For example, suddenly many companies lost their commercial vehicle business because, you know, that was connected. Somebody else lost something else. The connections are many. It's not just two companies directly who get plus or minus affected by any of these policies. That is the negativity, right?
So, in effect, Samir, how much headroom do you think is left in this market after the recent rally that we've seen?
No, actually, see, valuations-wise, it is not bad. Next year, earnings growth can easily be higher because of a general economic activity improvement, plus interest rate cut, plus a little bit of old projects, etc., finally becoming somebody's orders, somebody's capex. It is just that, as of now, I feel that it has gone back to a two-group market, which is actually what we are supposed to like, which is you can go long one group and go short the other more simply than was possible in March, April, May, June. So therefore, actually, environment-wise, this is a better environment for us as a long-short fund. But, you know, we also want over time that this cannot go on. We want obviously the rest of the economy has to improve, and it needs a few points, a few pushes from the government. And some of them, they're not taking the bolder decisions, and let's see, hopefully for the budget and before that, they should do that.
Actually, from your perch, perhaps you can look at more global trends which we don't get to think of. The crude prices, gas prices, there seems to be a secular downtick. Yesterday, somebody was talking about US reversing its a long time policy of not allowing oil and gas exports, and that might have a debilitating impact or bearish impact on gas prices. How do you play this on any Indian stock?
No, first of all, crude, in a sense, we are already playing by remaining bullish.
Okay.
Because that is actually the biggest help that the market has got in the last 2-3 months. But that does not mean that you will buy any of these oil and gas Indian stocks. Please, let me remind you once again. A company is supposed to make profit. A company's objective should not be that it will not be making a loss. You already read today in the papers that as soon as diesel prices corrected, now they want to reduce diesel prices. So basically you are giving them a guaranteed return at best. It's not even a guaranteed return in all situations. It is that if everything works well, okay, you can break even or make some money. But if it is wrong, okay, then you again stand in the queue and we'll see what can be done. So those are not stocks. But what I've realized in the last 4 or 5 years is you don't have to do anything for many things. You just say, thank you, God, and it will feed into your HDFC Bank one day. It will go up. ICICI Bank will go up if crude continues to fall. You don't have to buy a crude company. Let's not be trying to chase every new event that is out there, because some of these things are too macro and there is no grip on whether this will happen. But if it happens, indirectly you will benefit plus minus a little bit. So to say today, for example, That day I read, oh, one company is spinning off its cricket team and the whole stock goes up. I mean, what are these random overreaction to everything in life? You know you don't like that company, just let it go to hell. It doesn't matter. But we want to analyze every micro analysis of every company. What is the use?
I guess this is the phase that the market is in, right, Samir? I mean, look at the exuberance you see. Look at the stocks we are talking about these days. We haven't spoken about these stocks in years.
But you have not spoken, but you have not realized that how much they have lost in the last 2 months. So if you were to do money-weighted trade, that means not only that the stock is up 50% this year, but how many bought it at 20% higher than today and 30% higher than today, the new trade would not have made any money according to me.
Okay. What about logistics stocks? Now that's the big thing, especially after the Alibaba listing. Everybody is looking at people shopping on Flipkart, shopping on shopping on the net, so to speak. So you like that kind of companies?
I would have liked those companies. I used to buy personally in US in 98, 99 and all when they started. But in India, the valuations are too high. Plus, I read somewhere that the like Flipkart type companies ideally want to have their own logistics because they feel that there is so much return of an order or a cancellation of an order at the last minute that they want a little bit of selling at the last minute to convince the customer not to cancel. These things don't happen in US and other places. Based on the valuations, we will not buy. Actually, we would short the Indian internet company right now, and we are short one of them.
All right. Samir, we'll leave it at that. It's, as always, a pleasure speaking with you. Thank you very much for joining us, and I do hope your net position doesn't get below that 65, you said, right, at this point in time. Thank you very much.